Hi, everyone, and welcome and thank you for signing up for our webinar today. My name is Manish, and I'm founder and CEO of KredX. KredX is India's largest supply chain finance platform, which works in the entire spectrum of supply chain finance, with vendor supplier, channel financing to export import also. We are present in 5 countries now, apart from India, and growing faster. Over the course of my 2 decades of long career, I've collaborated with many finance professionals, and increasingly and mostly because post-COVID, what we have started seeing is automation is becoming more and more center stream. With distributed workforce, work from home, hybrid structure, supply chain itself is going into multiple direction with nearshoring, friendshoring, reshoring, all these concepts coming up. Automation in finance also is becoming more and more crucial. Today with us, we have a very influential CFO, who has the corporate finance and experience and has worked extensively with multiple technology. So I welcome Amit. Amit, thanks a lot.
Hi, Manish. Hi, happy to be here. Thank you for inviting me.
Thank you. Amit Prabhu is the Executive Director and Chief Financial Officer of PUMA Group India. Of course, PUMA doesn't require any introduction. I'm hoping that most of us are wearing PUMA shoes as we are having this webinar. He has been associated with PUMA for a decade, since the early years of the multinational in India. And across PUMA has become, in last few 5-6 years, PUMA has become almost like the leading shoe brand in India. And I think one of the biggest, if I'm not wrong, in India, even bigger than some of the other competitors. He is a thorough finance professional, and he's an unmatched resource on finance and accounting standards and trends around the world. Thanks once again, Amit, for joining us. So going into the topic that we have, so today's topic is how to use automation to achieve timely book closing. We are very near to book closing now, with March being generally the time for all Indian corporates to start looking into the book closing. I think it's the apt time that we should start looking into, as all the finance professionals should start looking into the book closing and what are the challenges that they face. So Amit, my first questions to you is, as I said, it's a timely book closure is becoming important, and government over the period has started not giving any leeways to corporate and sticking to saying that you have to close your books on time. And if you are a listed company, then extra pressure from SEBI also to report and do the book closing. So what are the challenges that you face generally in terms of timely book closing for a large company like a PUMA?
Sure. Manish, first of all, thank you again. Thank you for having me on this webinar. And thank you for the lovely introduction to me and about PUMA. Great to be on this platform, and congratulations on where you've taken KredX over these years. We've been associated with KredX for a while now, and we love the product that you bring to the market and the solutions that KredX as a platform provides us in our day-to-day operations. But I mean, talking specifically about month closure and automation, or rather book closure automation. So I think a large part, and when I started my career 20 years back, I was sort of amazed at how some of these multinationals have a concept of a month close. Because typically, I'm a chartered accountant, and we were given books at the end of the year by our clients to sort of audit and make sense of it. And typically, when you are auditing non-corporate entities, partnerships or proprietorships, enterprises, the audit is mainly from a point of view of determining the taxation at the end of the year, filing for tax returns and tax audits, etc. So in a way, the concept of a periodic book closure through the year was a bit of an alien concept 20-25 years back. But large corporates had them, and multinationals as such always had a system of having periodic closure and a thorough closure at that. And as you rightly pointed out, I think the concept of quarterly submissions to the stock exchanges has also come up over the years, which has pushed all listed entities to make sure that book closure is now not an annual activity, but a monthly activity, and a very thorough one at that. And so for us, honestly, the annual closure is much simpler. because we know everything that's happened over the previous 11 months in terms of what is to know from a financial point of view. So closing the year is only about the incremental data, as well as in terms of what are the other legal compliances or reporting compliances that you do at the end of the year. Having said that, I think so when you're repeating the process 12 times a year, it cannot be done the age-old way that was being done. More so because I think businesses have become very complicated in terms of the channels of distribution. Talking about ourselves, if you see over the years, typically distribution or trading businesses happen through a more a physical distribution network. Uh, there was always a concept of a wholesaler, then a retailer, where the brand really is dealing with a limited set of pan-India distributors or a statewide distributor. So you never really reach the end consumer in any shape or form. That has changed over the past 15, 20 years with retail playing a much more critical role in terms of how we sell and who we sell to. And over the last decade or so, I think e-commerce has really brought about a sea of changes in terms of how brands are actually able to sell to the end consumer. Now, all of this has an impact in the way we account our transactions. And the volume of transactions today, because of these changes, has gone through the roof. Earlier, you had limited 10 or 15 or 20 customers to deal with. Today, if you are on an e-commerce platform selling by yourselves, then you are actually managing every order that the consumers placing on those platforms. And so transaction sizes have really become larger. And to manage these transaction sizes, I think the month close activities have become a lot more complicated.
Very well, Amit. In fact, this leads to my second question, right? So number of volume, as you said, has increased manyfold. In fact, I was talking to Airtel CFO recently. He said, I receive like millions of cash inflows in my account. And the biggest problem is you don't know where it is coming from. So the issue with even if a monthly book closer is, how do you reconcile it? Is there you use some tools to reconcile, or what are the different challenges that you face in reconciliation, and what a error in reconciliation will lead to?
Oh, I mean, great question, because specifically when you are in the retail space, I think as you spoke about Airtel, I think when you are dealing with such large volumes, you need to have an automated system that can take care of recording the transaction and and bringing out any of the outliers. So it cannot be done by human. It can't be a human effort of reconciling system X versus system Y and then checking whether it's posted into your ERP or not posted into ERP, and then follow it up with the bank to look at that's not possible anymore. Okay, take an example. I mean, UPI, for the number of transactions that happen via UPI today at our stores is a very large portion of the digital payments that come through, and that is quite different from the way we were used to dealing with earlier. But thankfully, those are all integrated with the point of sale now, so the transaction set sort of becomes more homogeneous in that sense. But where we really have to concentrate is getting this data into the ERP, okay, on a regular basis. That's challenge number one. How do you bring that so many data into the single system at a transaction level and then have it reconciled? So for different parts of the business, we use different solutions. Okay, for example, collections is a different solution when you're receiving collections through so many different customers and so many different channels. For taxation, for example, booking of invoices, determining whether the input taxes are booked correctly. So that's a separate process. And even something like determining our own revenue recognition at end of each month. Okay, that's something which is internal, maybe an Excel based, maybe some sort of a automation RPA running at the back end, which can collate data across different sources and put it together and give us a sense of where it is. So different parts use different solutions, Manish. I mean, it's a matter of where we are concentrating at.
Great. Makes sense. And you mentioned, Amit, about, input tax credit and reconciliation issues, revenue. So does it lead to a potential revenue leakage if you don't do your bookkeeping in
Yes.
time, and how it impacts overall the business it holds?
Absolutely, because one second, yeah, sorry. Uh, it is, I think it is a serious issue in terms of, I mean, first of all, I think GST is a bit complicated, right? I mean, I think it's not the simplest of the taxes that we've seen, but anyone who's been through the earlier system knows the benefits of GST, and we would rather be here than in the previous
True.
system.
Absolutely.
So, in terms of how we account, see, I think the first challenge is the volume of transaction, right? I mean, how many vendors, what is each vendor doing, and how are we capturing the transaction into our accounting system? Thereafter, how are we reconciling it with the GST system, right? And all of that is done using technology now, okay? And without that, I think the revenue leakage potential is very, very large. Uh, Simple. I mean, if we have a bunch of transactions being manually posted, the level of errors that can creep in are quite big. Okay, and making sure that every transaction or every input claim that we make is compliant with the regulation is very, very important for us. So in a way, as an organization that's conservative, we would rather err on the side of caution. Okay, but then we also want to make sure that we are not losing out anything. Okay, so without using an automated system, I think the chances of losing out on input credits is very large, very, very large.
Right. And in fact, I was talking to another company, and what happened is they did a payment to their vendor, and apparently because some reasons the payment bounced, and both the companies has no idea that there is a payment which is bounced. And it took them almost more than a month to actually reconcile and come back saying that yes, some payment has got bounced because of some banking issues. Is also this kind of a problem is very frequent in your world?
Not not to the extent that I recall. Not see payments. Again, we integrated our systems with the banking system, so it's sort of a seamless payment mechanism that gets routed through the banking network. Not something that we have come across as often, Manish. But look, I'll tell you one thing that changed during COVID was import payments. For a long time, and I used to hate it, because I would have a pile of documents on my table, and I mean, the last hour of the day was simply sitting and signing those. I simply hated that task of doing that. But
I remember, yeah.
and hundreds of those, having to sign each sheet, and that was a point in time that happened. I think there was a digitization that the banking, especially the foreign banks, brought in, but I don't think it found much traction. I think, but COVID changed it all. COVID changed the way actually we banked. I think suddenly everybody was forced to work digitally. Physical transactions were far and few in between. Okay, digital signatures or uh, scanned documents or using the bank's own digital platforms for certain transactions, which earlier I think either they were reluctant or we were reluctant. I think all of that sort of faded away. So today, a lot of those import documentation or payment documentation is all online. The signatures for those are online. The authentication for that is online. So we really are moving into more paperless. But there again, what helps us is because it's digitized. I think there are no. I mean, the scope for error is much lesser. Okay, and all we need to do is automate the flow of information from our systems into theirs. Then it becomes that much more simpler as well.
Understood. And Amit, you mentioned that there are different solutions that you're using for reconciliation, different for maybe cash postings, different for tax payment, different. So, what are the different solutions that you can suggest to maybe our viewer here who might be interested in understanding what are the different solutions that you must for, let's say, timely bookkeeping?
Okay, so I mean, if I can name them, I mean, are you
Yeah,
okay?
sure. Yeah.
So, I mean, we use ClearTax Clear now for all our GST related transactions, even for you, and we're working with them very closely in terms of how to take it to the next level, integrating our vendors, systems, etc. From banking systems, of course, we have multiple banks, we have multiple peer-to-peer network connectivity with each of the banks for different transactions, so that we work independently with each of them to get those reconciliations, and as well as the thing with some of the foreign banks, we are actually working with creating joint solutions which can help us provide better insights into large volume transaction, especially on the e-commerce side. Okay, some of it is work in progress, some of it, because they're also using third-party solutions that are integral to their banking system to provide us that information. We use platforms like yours, for collections and certain customer accounts, etc., which again is a big change from the way earlier it used to be done. I mean, yours is a very completely transparent, paperless feature. Okay, everything happens online. So for us, those sort of systems make a lot of sense. Of course, on the retail side, we use our payment aggregators, we collect the online aggregators to give us comprehensive data at the end of the day, which then completely reconciles with our point of sale system. There is a bit of manual intervention, of course, because if you have outliers, you'd still need somebody to look into it and solve for that. I mean, as yet, we are not caught into an automation mode that eliminates that leg. Okay, because I think some bit of human interface on a certain transaction, I think, is still more appreciated at this point in time. Okay, rather than sort of completely digitized and automated. But I think that's where the future is.
Understood. And Amit, do you feel
even on the RPA front, we use UiPath for certain transaction aggregation. So we have a global team that works with UiPath. So we have automation processes that bring data from different subsystems or partner systems into our reporting network. It saves us a lot of time. I mean, so if take for example, we work with some of the largest retailers in India, and each of these retailers publish the sales information on their individual portals. So each of them have a vendor portal, or so to speak. So our automation systems sort of pick up those transactions and provide us consolidated reports. So in the morning, 9 a.m. when we walk in, if those reports were published on the individual customer sites, then it's ready for us to consume in whatever shape and form. It's then a matter of integrating it with our reporting system, and if there's a revenue recognition to be dealt with based on that, to take it up with the ERP and and deal with it. So
got it. And do you think, Amit, that instead of like multiple subsystems, there is a need to have like a one system to deal with everything in terms of like end to end, maybe from your account payable to your account receivables, from collections, cash posting to taxation, so everything being done at one and even like multiple banking partners for that?
Yeah, I mean, we'd love to have something like that, Manish, but I think the thing is, business has become very complicated, right? And honestly, look, more than a single system, what we need is a single protocol,
Right.
okay, of data transmission. Simple example, and I'll tell you where things are still a bit archaic, if I may use the term, is reconciliations with customers.
Yeah.
Right. I mean, my warehouse ships something to a customer X, and let's say I shipped 20,000 quantity of it. Let's say for whatever reason they received 19,995. They're 5 pieces short. Now that's one leg of the reconciliation. Maybe there's a pricing error. Something went wrong in my pricing, or something was wrong in the way they counted. So all of these differences in a trading sort of a business today is offline. So we have our accountants dealing with their accountants, trying to figure out what happened. And again, here, when we talk about large volumes, you tend to ignore these small variances, which over a time build up. And suddenly you're looking at, hey, there's a reconciliation difference of X. That is something where we would love to see some sort of a move. and I think the next big move should be in terms of how corporates sort of interact with each other on the transactions front. Okay, because right now we are sending in sales invoice, they are booking a purchase invoice. We have an accounting team on our side, they have an accounting team on their side, and it's always a question of who's right, and you're trying to solve for things which you'd rather not have to do at all. So I think some sort of a protocol which can help us transmit this information and get that feedback, that a certain transaction was completed, not completed, this is the difference, so that we can look at the difference more on a real time basis rather than having to do it once every 3 months or once every 4 months. So I don't know how big a challenge this is in other industries, but I think in some of the trading setups with pan India movement of goods, this is a challenge. I mean, you always have this issue of having to reconcile and figure out what the differences are.
Yeah. So in our world, Amit, we call your truth versus my truth, and because of more and more businesses are going with zero inventory, directly shipping from build to ship kind of model. What you ship versus what goods has been received could be very different, and
Very different, yes.
and that is where, in fact, KredX has started a new product, or actually the product is not new now; it's more than a year old now. Is what we call as a cash management system, where basically what we say is a trade is a double hook product. So your AP becomes somebody else's AR and your AR becomes somebody else's AP. And that is the connection that KredX provides, where it says that if you can connect to, if for your AR, if you connect it to my system, I will have the other hook to your customer's AP. And then there possibly will be the same truth that is following, right? So it's connected to your ERP, so it knows what all is getting shipped, and it's connected to their ERP, so it knows what all actually has got received. So it tried to reduce the dispute. So we have seen almost 30% reduction in dispute management and almost around 50% reduction in time taken by dispute using the system. So this cash management system is what I was talking about. It's more like a layer which basically works with your banks, your different customers, your vendor suppliers, and create like a one solution to tell you that what's your cash inflow, what is your cash outflow, and how your cash situation looks like maybe in 6 months to 1 year time frame also. Or if you want to stress your cash, then also how it will look like in terms of. That's
That's very
amazing to
interesting,
understand.
because I think, at least the colleagues that I speak to in the industry, I think this is a common challenge that we face, because end of the day, uh, from a corporate governance point of view, even they are just as interested as I am in terms of keeping things clean and reconciled. I think almost all of them also have their audit committees to respond to. They have internal financial controls that they need to strengthen. So I think it's a common finance problem. It's a CFO problem of trying to figure out how to get this done without actually breaking your back and without actually losing a lot of money, right? And some of it, maybe it's a business loss, but you want to keep your stuff clean. You want to have your books clean and everything reconciled and tied out. So nobody wants to have those issues.
Absolutely. And thanks a lot for validating our product theories also. So one last question, Amit, that how do you think that automation can add value and offer, a solution, maybe a moonshot? What do you think? So you already said that I want the protocol, the transfer protocol to be same in terms of how the data transfer. But anything else, like what's your wish list in terms of, and what's some of the suggestion that you want to give to our viewer in terms of use automation to, and again, going back to my first thing, that is, distributed workforce, work from home, hybrid work structure, supply chain being distributed. How do you think automation can help in timely book closure?
I mean, honestly, Manish, I think a lot of time today that is spent on a book closure is on getting the numbers together.
Yeah.
And not so much time in sort of analyzing what that number really means. Okay, so and look at it this way. I think most of the organizations here today, multinationals or Indian organizations, must have had an ERP implementation in the late 90s, early 2000, maybe up to 2007, 8, whatever, right? We're 15, 18, 20, 25 years from that system, and the world has changed quite a bit in this 20 years. I don't know how many of these enterprises today have moved or upgraded their ERP to the next level. So what typically has been built on top of these ERPs is business reporting tools, Power BI, Tableau, whatever, visualization tools that help you get. But from a reporting point of view, there's also that leg, and I'm sure in terms of consolidation across entities or gathering information directly from the ERP, some of it that has been completed. It is, I think, in terms of how you finally get that number in your ERP, then which goes into your reporting system, say an Hyperion or any of that. I think those protocols is where it takes time.
Yeah.
How do you get information into your ERP? Is the connection with the subsystems just as strong? Is the ERP now capable of handling new business realities? Okay. And I don't think there's an easy solution to it. I think to everybody their own. And as I said, it depends on what version of the solution you're using currently. So I think that's a bigger challenge in terms of doing a smooth month closure. And end of the day, I keep saying this, a month close, end of the day, human activity. I have a whole bunch of people, FP&As, and we're trying to, close for their individual divisions. And then we're trying to consolidate. In a month, if each of them is spending 5 days to just do that and repetitive, somewhere there's also a fatigue factor. Okay, there's also a feeling that are we really adding value?
Yeah.
Okay, so I think we have to get rid of, I think where we need automation is actually on the process part of it.
Yeah.
Okay, I don't know whether the single system can help. Very happy if it could. Okay, but I think you'll find that the realities in every enterprise is different. Okay, because the main system and subsystems perhaps have aged differently. Okay, something has come later, something has come earlier, so the connection is a bit different. But eventually I think it's a human problem, and I think whatever challenges that a human is trying to solve over 5 days, if that can be solved in a timely manner of two, where you give that person 3 additional days to analyze and come back and come up with smart answers, which helps you grow business. That makes the month closure or any book closure far more meaningful. Otherwise, it just becomes a mundane exercise that every month you're looking at numbers and just it can be quite frustrating at times. So I think the automations needed fixing the data, the data validation part of it.
Yeah, absolutely. I totally agree. I also used to tell my team that, don't just bring data to me, tell me what, why, how, right? So these are the key questions you need to answer. But I think it's also important that they have time to think about what, why, how. Otherwise, if they don't have time, then they're just making the report and just passing on, which is just a lot of numbers which come. So
true. I mean, the sad part, I have seen, and as I speak to different people, my people who I studied with, people who I worked with in early part of my career, and I think a common theme is that let's say if you have a deadline till, let's say whatever the deadline is, till 2 hours before the deadline, people are still sort of figuring out the numbers. Okay, and in the last 2 hours they're just putting things to come. Very few people are actually able to answer the why part of a number, and I think that's more important. I'd rather have a much lenient month close activity where I say, okay, listen, I can I can live with not all numbers being accurate to the last. We don't have to follow every detailed protocol on a month close activity. But if that saves you one day and you can come up with more meaningful number that helps me run my business, but I'd rather have that than have you tied out to a checklist which has 100 points for you to complete on a monthly basis. But you don't have time to, tell me why. So
yeah, absolutely. Totally agree. I don't think I can, question or debate anything what you are saying. Absolutely to the point. Thanks a lot, Amit, for your time here. And this was really, really informative session. I'm not sure about more from the viewer, from But from my perspective, I really have a very informative session here. Learned a lot of new things that you are talking about. Possibly try to force my finance team also to start working towards some of them. My takeaway is the monthly book closer is going to help a lot. So, and bringing a lot of automation definitely into the force. So I am going to talk to my finance team, maybe ask them to reach out to your team to find
Oh,
it
sure, sure,
best
sure.
practices.
No, I think, I mean, let me be very, very honest. I think month book closure has a huge amount of advantages, okay, compared to not doing it at all. I think it's an absolute must, however small an organization you run.
Yeah.
Okay, even as a startup. And I think I know many people tend to ignore this, saying there's no. I think there's a lot of value in getting it done on a monthly basis. It may take a day for somebody to do it, 2 days. Don't make it so complicated that you're chasing only that, but it gives you a sense and direction of where your business is running. From a planning point of view, it's an absolute must.
Yep. Yeah, absolutely. Once again, thanks, Amit. Thanks a lot on this. Really appreciate. I guess our viewers might have some questions specifically for you. We'll collate all of them and we'll send it over to you. And if you have some time to answer some of them, they would be really appreciate that answers coming from you.
Sure, Manish. I mean, let me know if there are any queries. Happy to answer them. Yeah.
Sure, sure. Thanks, Amit.
Okay.
Thanks a lot.
Thank you, Manish, and thank
Thanks,
you,
our viewer on this. Thank you.
Thank you.